You want to invest in the TSX but are not sure what to buy, and you're kind of nervous about owning single stocks. Fortunately, it's now possible to invest in the stock market all while being well diversified and paying minimal fees. The solution is ETFs, exchange traded funds. In this video, I'm going to explain to you what ETFs are and which ones you should consider in order to invest in the TSX. So stay tuned. Hi, I'm Julien, Regoli, CPA, CMA, finance coach. My purpose is to demystify finance, teach people how to save money and how to invest money so they can reach financial freedom more rapidly. This is the content of my channel, so sign up and hit that bell button and you'll be notified whenever I upload new videos. Thanks in advance for watching. So you want to invest in the TSX, but are not sure how to go about it. The solution is ETFs, exchange traded funds. An ETF is simply a fund that owns a pool of stocks. Index ETFs contain stocks that replicate the index. For example, a TSX ETF replicates the stocks that are in the TSX. ETFs are not mutual funds. ETFs have lower fees and are more tax efficient, and this is why I prefer ETFs over mutual funds. So there are a few ETFs that I wanted to show you. These ETFs pretty much mirror the Toronto Stock Exchange. All of them generate, well, except one, you'll see, but they generate dividends, in the area of 3% per year. The dividends are distributed quarterly. They basically replicate the Toronto Stock Exchange. These ETFs are a great way for you to get into the stock market, own a pool of shares, not just owning one share here and there. That can be risky because if there's a problem with a company, a scandal, an accounting issue, management gets caught doing who knows what, that can really affect the price of a given stock. But if that happens and that share is within a pool of a bunch of other shares, then the impact is really minimal. So let me show you. I have 5 for you, so take a look at them. They're well worthwhile your time to take a look at and consider if you want to invest in the TSX. So here they are. So the first one here is the iShares S&P TSX 60 ETF. It follows the 60 largest and most liquid securities listed on the Toronto Stock Exchange, and you can see that over 5 years this ETF has generated 46.54%. What I look at is the expense ratio. So the lower this is, the better. Look at this, 0.15%. So it's very low. And the other thing I look at is the dividend yield. So every quarter you're going to get a dividend from this ETF. The yield you see here is an annual yield. So shares of ETFs are traded like regular shares. You've got a bid and ask. Some are more liquid than others. You might want to put a price limit. The next one is the iShares Core S&P TSX Cap Composite ETF, XIC.TO. Over 5 years has generated 44.58% return. And that's the total return. So this includes price appreciation and dividends combined. You can see the expense ratio on this one is 0.05%. Very little management involved in this one. And the dividend yield is 3.17% as of today, November 11th. And this is an annual figure. And then we have the Vanguard FTSE Canada All Cap ETF. This extends beyond the TSX. It contains more than just TSX securities. It contains a broad Canadian equity pool of shares. And the expense ratio 0.05%, very low. Return over 5 years 41.59%. The dividend yield is less than 3%. So not as good of a performer compared to the last two, but but probably more diversified. The next one is the BMO S&P TSX Cap Composite ETF, ZCN.TO ticker, generated 44.38% total return over the last 5 years. Very low expense ratio as well, 0.05%, and has a good dividend of 3.54%. So the next one is the Horizons S&P TSX 60 ETF, generated 47.57% return over 5 years. This is total return. Has an expense ratio a little higher than the others, 0.07%, still super low. Has no dividend. This one is different because it tries to replicate the TSX's total return. So the total return includes dividends. The other ETFs we looked at try to replicate the TSX before any dividend return. So what this one does is it doesn't pay any dividend, as you can see here. So the dividend annual yield is 0%, but the objective of this ETF is to mirror the TSX's total return. This is an interesting investment for people who don't need the dividend in cash. You're going to have a higher capital gains appreciation, but you're not going to get any of that quarterly dividend distribution. So it's fun to compare all of these. How do these compare to the Toronto Stock Exchange over 5 years? Well, this graph here shows you the total return of the TSX in the last 5 years. Total return, again, includes price appreciation and dividends. So 44.46%. Now, how do these compare? So if we look at the first, if we compare with the first one, which is the iShares S&P TSX, you can see that the iShares actually outperformed a little bit. Now, it's 46.54 versus 44.146. If we add the iShares Core, iShares Core performed a little, almost mirrored the TSX at 44.58%. Okay? And if we compare it to the Vanguard, didn't perform as well, because remember, this is all of Canada, so it includes a broad base, a broad pool of equity across Canada, not just the TSX. So it's 41.59%. We look at the BMO now, is really close to the TSX composite index at 44.38. And finally, I think this is the winner, Horizons S&P, 47.57%. So okay, what's fun to look at also is how did this perform over 10 years? So what's the total return over 10 years? The iShares S&P TSX 60 here has made almost 80% over 10 years. The iShares Core 71.79. This one I think we can't compare because it hasn't been in existence for 10 years or more. So this we can't really compare. So if we look at this one here over 10 years, 69.4. And this one, Horizons S&P, over 80% in 10 years. So this return is net of expenses. My favorite of all of these is this one here, is the iShares S&P TSX 60, because it has a really good return. Although the expense ratio is a little higher, the total return has been very, very good compared to other comparables. And I like the fact that it distributes a dividend. And obviously this one, the Horizons S&P TSX, is interesting because it's generated over 80%, so it beat all the others. However, it doesn't pay any dividends, and I'm a dividend guy. I like to see cash regularly. Yeah, this is why this would be my second choice. So if you have any questions or comments, drop me a note in the comment area below the video. Feel free to book a one-on-one meeting with me. You'll find a link in the description of the video to do so. If you like the video, smash the like button. That helps me out with SEO. Stay tuned to my channel because more videos are upcoming on how to save money, how to invest money, and make sure to hit that bell button. You'll be notified whenever I upload new content. That's it for today, folks. Thanks for watching, and we'll see you real soon.